Basically, one of the most important things to actually getting a property or any type of investment, if you are looking at leveraging your money from a lender, being a bank or any type of finance, the most important piece of the pie is your finance broker. And I say finance broker and not bank. And this is why, because a bank can only provide you the products that they have in-house. They can only provide you the interest rates from their product list, right? The person that works in the bank works for the bank. And I can tell you from experience, 20 years being in the industry, in property and finance, that I've never dealt with the same person year on year when it comes to a bank. So for me, money is everything. My portfolio has only been able to be built because I've had the ability to get the money from somewhere. So the money piece, and I link that back to the broker. And Brendan, I'll let you sort of talk about why you think it's important. But getting the money is the most important. How cheap the money is, for me, has not always been the most important. It's about getting the money.
Absolutely.
But like my background is actually in finance, and I've stopped doing the finance brokering, but I've partnered with people, including yourself, because finance is the key to being able to build your portfolio and your wealth creation.
Yeah, absolutely, Ida. And as you say, the distinct advantage or difference, I guess, is that we're not affiliated with just one bank. Brokers have the ability to be able to work with and compare every lender available in Australia. And certainly that's the case with our firm. So, and I guess we have a legal responsibility, not just to, be able to get the loan. It's actually to be able to do it, meet all the compliance regulations, which are regularly checked, but to actually act in the best interest of the client. So that may not just be rate driven, as you said earlier. There's a whole lot of other pieces to the puzzle, and having the ability to use any one of a wide myriad of lenders means that the individual application can find a home with the best possible outcome for everyone involved.
Yeah. What's the biggest, like when a customer, give us some examples of a customer coming to you, because I can remember a lot where the customers contacted you and said, I haven't been able to get the money. They're not approving my loan, or this is all I can get. And then you've been able to turn that round. And why was it that you could get it and the bank couldn't?
It's a really good question, and I think it's one of the biggest reasons is the fact that the part of lending which attracts the most media attention is the rate changes. So we'll hear the RBA increase every month when they did that, throughout the last 2 years, and then there's a bit of a reprieve, which is fabulous. But of course, equally as important, if not half as much impact on your ability to get the loan, are the policies that are in place. And it can be a whole myriad, whether it's how many investment properties you're able to use as security, the amount of rent that the actual lender takes as part of your income.
So are you saying different banks have different policies around these things?
Exactly right. So it might be they take 70% of your rental income, and it's called shading, or they might take 80, or some banks 90%.
And are you all aware of the different policies for the different banks?
That's one of the key parts that a broker does, is to be able to go, okay, these are the lenders we'll work with these individual circumstances. So each individual lending application will come with its own unique set. It's the circumstances, the scenario. And once we analyse that position, whether you're self-employed, there'll be different lenders who are better suited. Whether there's a self-managed super fund, there's only key lenders who will now work in that place, and the list goes on and on. So those policy considerations are often the reason that a loan doesn't get over the line, when in fact that does have a home somewhere else. But knowing where to place that if you're going direct to a bank is very hard.
For example, a self-employed borrower that's been with an ABN for multiple years could get knocked back based on just a 2-year financial. Now, policy with each lender is different, and I know this from my experience, where people, especially self-employed people, would get knocked back, not understanding why, because their current year's income was like huge, but because the banks that they were going to were averaging out 2 years of income. That's just one of many examples. So what I'm gathering here is that you're saying that each bank has different policies on what they will and won't lend and how much they will lend for different scenarios.
That's right.
And then also I'm getting that there's also different interest rates and different products. And there's what did you say, like 25, 30 different lenders that you can go to?
Yeah, look, we have 80 on our panel, but
80.
there'd be 20 to 25. A lot of those would be non-bank lenders, and there's a home and a reason for all of those different lenders existing. It might be self-managed super funds or commercial loans that they specialise in, and we're across all of those. But within the residential space, there might be, regularly 20 to 25 banks that we'll consider in that equation for most scenarios that we might see. And your self-employed example is a really good one, because we regularly will get that where a client's been knocked back, the lender they've used, their standard policy is to take 2 years average from the last 2 years of financials, whereas there's other major lenders who will look at the last year in isolation with recent BAS statements if it's been increasing, and other lenders again where we can do lower doc or no doc loans where it's actually just stated financials from an accountant. So the spectrum and the different result between those three policies alone is quite substantial.
Look, and like when we were talking about going online and doing these searches and thinking, oh, how much can I borrow? I'll just quickly jump online and see what it is. A lot of people don't realize that's actually hitting your credit, right?
Absolutely.
Yeah.
I don't think many of our first home buyers, or in fact many of our clients, realise that those online search engines or even a phone call to a lender will actually show up on your credit file, which can do all sorts of damage you have to undo. If you come to a broker, you come to us, Hudson, and the systems we have in place, the process we'll use, our calculators will be able to determine your maximum borrowing capacity across all the lenders.
Yeah.
And then we'll be able to look at nuance at the policies that apply, your individual circumstances, and then narrow it down to 2 or 3 best homes that you'll choose from where we know that loan's going to go ahead, and none of that shows as a credit inquiry on your file.
Until you're actually ready to borrow. And that's the most important part,
Exactly.
right? Because people are doing things backwards. They're going out and looking at properties without even knowing how much they can borrow. So knowing how much you can borrow, but what you guys do, and that's why we work so well together, is we'll send the clients through to actually work out their maximum borrowing power range
Exactly.
between the lenders to see, okay, well, this is the price point that we need to be looking at properties. And that's more important. I mean, what you're saying is that doesn't even hit your credit until you apply for the loan.
Doesn't hit your credit until you've actually gone ahead and actually submitted an application. And like the clients, which we'll work with some of your clients, one I worked with recently, Ida, we wanted to look at 2 scenarios. So we did that maximum borrowing capacity in their individual names, and at the same time, alongside it simultaneously to compare, we did that in their self-managed super fund, and they were able to determine which way was the better approach to purchase that property.
Yeah, and we love those scenarios, and we're running them a lot, whether or not someone wants to live in the property versus not living, how much can you borrow? And that's a big one with the younger generation at the moment, working out which way is better for me to live in versus investment property and rent elsewhere.
Yeah, I don't know, that's a topic we're going to delve deeper into, but that reinvesting, and there is a significant difference on your borrowing capacity when you run those different scenarios, and that's something that we do every day of the week for our clients.
Perfect. So if anyone wants to find out how much they can borrow, they can just email or contact Hudson. Any of our clients can let us know, and we can basically do a referral on as well. So I think
Absolutely.
that's super helpful for anyone. And I know for me, I'll always go the broker, and I'll always go where the money is.
Fabulous.